Caroline and I have noticed something. Let's start here. Every day, literally, the Daily Cadence, we are delivering news about a new fund that's closed. What is the big picture macro driver of that activity, Andy, and in your case, specific to you?
That's a great question, Ed. And I think it really comes down to LPs, so investors in funds, looking for ways to deploy capital into managers who have a knack and a history and a track record of having found kind of breakout companies before they were obvious. And I think as seed investors, that's what we have to be world class at. We have to be able to see around the corner and see the things that most other people can't see.
Is, Andy, almost the seed and the very early stage, the Harbour in the storm at the moment? Is that where you're getting the interest from LPs?
I think that's right. I mean, when you invest as early as we do, and this is often inception stage or very short afterwards, you are insulated from the global macro a little bit. And of course, there are going to be knock-on effects from the tariffs that will affect maybe some of our later stage portfolio companies who are thinking about maybe going out for an IPO in the next year or so. But I think for the very, very early stage, I mean, it's just given people the steely determination to put their heads down and to just build.
I think more broadly, we're thinking about, therefore, where it is impacting your later stage investments, the follow-on investment that you've given. And goodness, I mean, you've been founded in 2004 as a VC company, so you've got long-term bets coming to fruition. What are you thinking about the exit market right now? Because, Annie, correct me if I'm wrong here, but a lot of the exits you've had at Uncork have kind of been M&A. You haven't had that many landmark IPOs.
Yeah, I mean, the IPOs that we talk about, obviously, Fitbit was the first, SendGrid, Poshmark. Postmates had filed for IPO before they were taken out. And I think, there's been lots of talk in the industry over the last, even like 2 weeks around, if IPOs aren't happening and if M&A is still slow or that we're beginning to see kind of the drip of deals happening again, actually a lot of liquidity is probably going to come from the secondary markets. And I think as early stage investors, we have to be thinking always about how we can begin to realize liquidity for our investors. Because honestly, if we don't give them capital back, they won't give us more in the future.
OK, so let's show the portfolio names you highlighted again. What do they have in common when you think about, OK, you want to look at the next great startup at the early stage, but as I read out at the beginning, in AI?
Yeah, I mean, I think firstly on AI, AI is pervasive today, and it will only become more pervasive. I think, people are still talking about AI native startups. I think you wind the clock forward not very long, and all of a sudden, talking about AI is going to be talking about cloud, where it's just assumed that you're building using AI. And in terms of the companies that you highlighted, I think that really the two things are that, these were early bets on founders that had a particular point of view on how things should be done. And secondly, they were opening new markets. I mean, people obviously now think about Uber Eats and they think about DoorDash, but Postmates was the very first on-demand food delivery app in North America. Fitbit was the first consumer-grade wearable that could track steps and fitness. So although, these are different types of businesses, different business models, that kind of one thing kind of runs through all of them.
Andy, there's some data that's been doing the rounds on X, and it's about early stage investing and how the pool is dominated by few players, Andreessen, Sequoia, Vinod over at Khosla. What's that like for you in that environment where there's a high concentration of activity from just, say, half a dozen to a dozen slightly larger firms?
Yeah, I mean, we typically see those as the firms that will follow on from us. I mean, yes, they all have seed programs. Yes, they're all doing seed investing. But, when you're trying to deploy a multi-billion-dollar fund, you can't be slinging $2, $3, $4 million checks all day long. So, we see them as partners. And I think one of the things that we love about seed investing is that we have our place in the ecosystem. We can be very collaborative with our co-investors at our stage and then work with the names that you've mentioned later. And I think as I talked before about our challenge and opportunity is we have to be able to pick things before they're obvious. As soon as they're obvious, a Khosla or an Andreessen or a Sequoia will swoop in and pay big money for it. So for us, it's all about spotting the things that aren't there yet.